Good evening. This is the Elliott wave update for the Nasdaq 100 for Monday, April 25th, 2022. Interesting day again, and I think that's the way it's going to be for a little bit, that each day will present its challenges, its surprises, and realizations. So again, I'm starting on the daily. So we're going to kind of dive in because I want to dissect a little bit more here today as it relates to the big picture, working down to our intraday picture that we trade by, and how I put things in perspective in terms of market reaction, what the market is doing to the overall picture. So again, on my largest picture that I'm showing on our day-to-day, it's the daily chart. But on that daily chart, I have marked a supercycle third wave top, a cycle wave 5 top, a primary wave 5 top, and an intermediate wave 5 top. So those are pretty long, they can pretty big degrees. The top one, this third wave that's completed, I believe here, began in, I believe, 1984 or something like that. It's quite a ways back. So it's pretty big. And now we are doing a supercycle degree, fourth wave correction. Now that fourth wave on a supercycle degree is going to contain 3 waves, an A, a B, and a C of cycle degree, which will contain 3 waves, A, B, C, on primary degree. So each one, these are building blocks. So we're going to be repeating the same patterns all the way down. But the shape that that A wave takes in each one of these can be different. And what I mean by that is we have 2 forms of corrective patterns overall. Now, the internal part, there are many variations, but 2 basic patterns, one being a zigzag, which is exactly a zig, which is a 5, 3, 5, an ABC, where wave A and C are 5 waves, and wave B is a 3-wave structure. So while I'm counting this as intermediate wave 1, it could be intermediate wave A. They're going to resemble and do the exact same thing. And this can be intermediate wave B, again, of a primary degree wave A. So we're setting the tone as to what will happen on coming, what we'll be looking for getting higher. So we know where we're going to be looking for 5 waves, we'll be looking for 3 waves. And again, on these higher degrees, it's going to make a big difference. If I'm going to have a primary degree 5-wave decline to form cycle wave A, we're going to go very deep. We're going to end up beyond 2020's lows, March 2020 lows. We're going to likely end up closer to 1990 lows, 2009 lows, excuse me. 2009 lows would be up next once the March 2020 lows. And a lot of things in my mind need to occur for that to happen. And I'll go over that again in an additional Nasdaq big picture view and just kind of keeping it all together. I'll put one out hopefully very shortly. In any case, intermediate wave 1, so from there to there, equates to 4,275 points. Minor wave 1 of intermediate 3, which is where I believe we are, so minor wave 1 consists of 1,540. So we're in, if I'm looking, I should have put one more underneath here, and that is intermediate wave 2, and intermediate wave 2 is 2,365 points, I believe. And that would go right under here. So we're in a minor an intermediate degree 3rd wave down. So we go from that top level. And one above, it's an A wave within a primary wave 5. And that A wave in a primary degree can also, if this turns into a 5, that can turn into a 5. Or it can be another A, a B, and then a C, zigzag, but it'll show up on a primary degree. So we've got to let this all unfold, and it will. And so when we get down into market reactions like this, after 2 heavy down days, boom, boom, they were easier to trade because the direction and the trend were set early. So it was the bounces that one would expect, but got disappointed on because either they got caught in the position, did not get what they wanted, and then ended up carrying or taking a bigger hit than they wanted. But it was clear that the market was going to go down. It was clear on Thursday. It was clear on Friday that that's what the market was going to do. Today, I had anticipated is like, we got to be aware. We have to take in and look for bounces. It's important. Nothing's going to go straight down or straight up. So you're looking for the bounce. As to what degree it's going to go or how high it is, we can estimate, we can use Fibonacci, we can use the moving averages to put together that type of a picture for our hourly time frame, and then on down. But in the case of our big picture, minor wave 1 of intermediate 3 is 1,540 points. Minute wave 1 of minor 3 is 1,114, and that is what we did off of the 4,298 high down to this morning's low at 13,184. Now, as I have been discussing, the waves are going to subdivide, and they'll do it more than once. Okay, well, here's the first one. Here's the second. And now here's the third. So I believe, and now I'm going to go down to that hourly chart. So on the daily, we're in a corrective phase. Well, where can this corrective phase go? It would appear that we are indeed correcting. So I had left this here, and now I'm glad I did, because if I have to go over, I have to now go 1, 2, and then I have a clean 3, and then a quick 4, and then a 5, quick 5 down to that 3,184. But it does, and I can count 5 waves down. So it certainly is not all of minor 3 because it's too small. We've just laid out what minor wave 1 is. If we remember, let me just go back to that daily so I can tell you again. Minor wave 1 of intermediate 3 is 1,540 points. I'm looking for the intermediate third wave and actually the minor third wave to break below 12,942. I am expecting that in the minor degree. Now we're 1 down and in the minute degree, and now we're in a minute wave 2. What are the possibilities? Well, we may have already done it. What we're kind of waiting on now is NVIDIA reports at 4 o'clock Pacific, so 7 o'clock Eastern, so in about 40 minutes. And I think that's kind of what the market's waiting for too. We're just kind of hanging out. Everybody's talking like you're in a pit and everybody's asking how the weekend was. So in any case, I would suspect that we can have more. And how do I kind of look at that? Well, if I am counting this as a completed move, 5, I'm putting that 1 underneath there, which I believe I did. There it is. I'm going to put in Fibonacci retracements because I'm now going to just put retracements around wave 1 so I can see where, I'll change that in a minute, where all of this comes in. Now, let me just take 2 seconds. And this is 14,298, 298. And this is 84, 83. I'll give it 3. And it'll work. Okay. So here are our retracement levels to coming back up. And this is in the Nasdaq. So in the Nasdaq, a minute wave 2 has the capability. First of all, it got to that 50, broke above it. Now it's heading back down to it. Here's the setup. It's an hourly setup, but here's the setup on that level. Okay, come on. There you go. Here we are. Now we're sitting right on it. Again, if I move it down, it'll move. So if the hourly holds at the 50 or slightly below, because the 50 is at 50510. Now, if it holds and rallies, then that is support. And when it would break 531, it's a buy. That's on the hourly chart. You can get a lot of earlier ones if you just move back and you do the same type of price action study. Where is it sitting? If it holds, and there's the break. And when it breaks that high, so if it breaks above 13,550, it basically becomes a buy. And that's where I would think that's where they had 13,609. So you can set that, you can preset it, and you can do it, and then boom, and you're in. And then you can monitor your trade, or you can put, you can use a trailing stop. You can use, there's enough things like say on an ETM strategy off of a Ninja Trader. In any case, that would be the take. Now it's a wave 2. All right, so I can get A, B, now we're in the C, so it's 1, 2, 3, 4, 5. So it does look like it's going to hold, and it does look like we probably get up here at least. And that's tonight, that's now. We are pulling back a little bit because we ended a little bit overbought. So they're bringing it in. That's perfect. It's a little wave 4. We're looking for the market to hold above 13,508 and definitely not start to break below that 4, which is at 05. I think. See, it wants to anchor itself instead of just giving me that. In any case, I do think it's a wave 2. That suggests that we are still in that larger third wave. So I'm now looking for a minute 2 and then a minute 3. Again, we need to start getting further down, and it can continue to subdivide, but I'm not necessarily going to be looking for it as intently as I was coming off those initial, coming from the intermediate to the minor to the minute. That's where I will look for it. That's where we will get it. And then when we do get it, we've got our next move. And the next move, seriously, we just have to work through and trade this corrective pattern. They're not easy. That's what made today in its entirety not easy. The moves were sudden, jerked. They just pulled quickly and then reversing just as quickly. And a lot of them were very wicked. And what I mean by wicked is that within 30 seconds to a minute, the Nasdaq was pushed $80, 80 points within a minute. And that's pretty dang fast. And when you may be sitting and you're not in the correct position, a one lot is very costly. So keeps you on your toes. But the trend, in my view, will be picking up again in the form of another third wave. So again, we're in the 3 of the 3 of the 3, and that you've heard me speak about. So let me see if I can take this back out. I can a little bit, but again, I want to show you what I mean. So we're in an intermediate third wave, and within that, we're in a minor third wave, and within that, we would be in a minute third wave. So it would be wave 3 of 3 of 3. And that's all as in part of this original, or not original, this first larger primary degree wave down of this larger correction. So again, that's our big picture. Now we're moving it down. And to get there, you got to stay on the hourly. And in fact, to trade it, the hourly in terms of day trading can be forever. Unless you're really good and patient with swing trades, which many people are. Do not get me wrong. They're very functional and they work, but there are different ways that you can trade it. As a day trader, if you're knowing that once it starts to break 13,550, that there is a very strong probability that it's going to go to 13,608, you're looking at 58 points, 60 points. I will trade it for 50 points. Why not? And so it's a good little day trade. Again, if it gets there, and we'll see how it trades, because if it's a wave 2, I'm going to give you the following. It is a wave 2, and this would be the normal expectation, but thus far, only the intermediate wave 2 actually met the requirements that I look for when I'm looking for a second wave. Albeit, as we slide down on the degree scale, the minor wave 2 is not going to be as big as the intermediate wave 2 in terms of price movement, but in terms of getting up to the same Fibonacci levels, I would look for that. So because you've gone down a degree, you're not covering as much distance. Intermediate wave 2 is correcting intermediate wave 1, and intermediate wave 1 consists of 4,257 points. So 50% getting on to 618%, 2,365, and that's what intermediate wave 2 was. So I'm looking for more, and I didn't get it in the minor wave 2 before we dropped off the face and put in my minute wave 1. So is it going to happen again? We got to the 50. That's pretty strong for me in the degree level that I'm looking at. But it can get here. The most common would be 13,740. The 50%, again, retracements, the 50% retracement is 13,741. 618, not out of the ballpark. And guess what's right there? The 200. So now you're beginning to see how these line up in terms of moving averages and resistance. So the 200 moving average is 13,890, we'll call it. So 889, 890. And the 618 is 13,872. So we've got a little bit of a zone there that should provide some resistance if indeed it's a wave 2 and everything else is copacetic. So in other words, it's like the market is kind of pushed. Everybody's looking both directions. It starts to come off. Whether it's the ultimate top of wave 2, to be determined. What I do know is that if this remains a wave 2, a minute wave 2, it cannot exceed 14,298. That's top side for this wave 2. If it breaks that, we take another step back and see what the heck is going on. Right now, things are falling through as they should. And I also mean by that is that the wave patterns themselves are continuing to do what they should be doing. I was looking for that additional subdivision. So it subdivides again. And so I got the 1, 2 on the intermediate degree. I got 1, 2 on the minor. And now, as I said, I'm looking for more because we're inside that third wave, and it's going to at least subdivide once, which is doing right there, but always, pretty much always, the third, that minor third subdivides into its own. So it's a set of minute waves. And they can be just as powerful as we have already seen. The first wave of this minor third was at the 1,100 points, approximately. Now it's 1,117. It is important to realize that it gets smaller and smaller, but the decline itself is picking up steam. That's why we had back to back, down 300, down 300. And we should have more. So we're still within that minor third. We're still coming off. We're now in this corrections. I keep telling you, they're going to happen. We need them. It's a point of relief. It's sellers. You want it. We want that trend to pick up again. It does make our lives easier. It does present cleaner trading because the expectation is just a continuation of the downside. One thing you'll hear me continue to say, and I'm serious, me personally, I don't like trading corrections. I get caught in stuff, so I end up giving back money. But when it's trending, yeah, you're on point, you go. And the corrections will come in under expectations, under Fibonacci expectations. When you're trending, the others will come in under, and then that trend will resume. So this, because we're done with 5, here's the other ticket, folks. We got 1, 2, 3, 4, 5. And that, or actually we could do 1, 2, and then I could put a 3, a 4, and a 5 down here if I had to. Either way, they both work. One's the shortest, three's not the shortest. I believe 5 would end up being the longest. But in any case, I can count it down, put a minute wave one there. 5 in either direction, you're going to get an ABC correction. And depending on where it is within that sequence, in other words, this impulse sequence, it's a wave 2. Versus that after a third wave, it's a wave 4. But this is a wave 2. Minor 1, minute 1, another wave 2. Those are our options. It just cannot exceed that, but it certainly can go past that 200. Remember, we're dealing with Facebook, Google, Microsoft. We got NVIDIA in a half hour. We have Apple. Got them all coming out this week. So we can get there. And then once it's done, it pulls a Tesla. Notice how Tesla tried to rally again today. It's like, no. Boss man's over going to decide he's going to buy Twitter. That's going to shake everybody up. But don't worry. I think that the US government has got enough guts that they're going to postpone it or delay it or whatever. And that'll kind of get the money shifting around again. Because if you have to commit it and give it to him so that you're getting your shares at that price that he's going to do it at, well, you might have to wait. Anyway, for tomorrow, allow for this move, 13,609, and then we have 13,740, 13,872, 13,970. That's as far as I would go right now. And I am looking for the downside in the form of a wave 3 to resume. Okay, next update will be on Tuesday, the 26th.